Hello and hello. Today we have enough time. Oh, this is that screen. Today we have enough time. Let me fix this. There. Today we have an hour before the open, so let's do the daily routine, and after that we can focus a little bit on the news. Okay. Let me check trading terminal. So yeah, this screen should be familiar already. We open every single link here and we get the economic calendar. So in 5 minutes we have the treasury refunding announcement, PMI 15 minutes after the market open, and later it's ISM number. After that, petroleum, and then the bond action. That's it. That's for today. Where are we sitting now on the markets? Global equities from around the world. We get the beginning of the year here. All of them are very much in positive territory. The only one lagging is here with USA, and here we have the S&P 500. Right, there are some indexes that are doing better than the S&P 500, but this is the indexes we have in this picture. Not super great, right? If you notice that for the last 3 months, right, this is 100, so they went down, they went up, but nothing extraordinary in the last 3 months. I thought that was going to change, but it did not change. We can see here why I think that it did not change. You see the day yesterday, it pressed lower, it rejected the low. That's positive because there is an important trend line here. Look, something like this. All right. There is another relevant trend line like this. Right. So it's holding this. But look, now in the monthly candle, it's red. That's telling me, hey, watch the monthly candle. It's red. As of now, we're not doing that bad. Let me check. As of now, the ES is about flat, right? Then we close here yesterday, just pushing higher, but it went below the 2025 close, right? But then it recovered, and today seems we are opening okay. But notice that, hey, there is some people that are taking a negative month to date window. The sell off yesterday was not that bad, right? It was a negative day, but not near -1. Let's see if we get what had happened recently is that after a negative day, we flip. But here we have 4 consecutive days in a row. Here we have another 4 consecutive days in a row. Here we have 2, and then a positive one, and now we have a negative one. So here we have 2, here we have a bunch as well, but then a strong recovery. What is getting me is the divergence here. New York Stock Exchange, new highs, more highs than lows. NASDAQ, more lows than highs. And this is the title of the video. Hey, AI is hurting some companies, right? It's not only in NASDAQ, but NASDAQ, you can see we have 5 days of down pressure. But on the NASDAQ itself, let me put the NASDAQ here. Let me put it in daily data so you can see here in daily data. It is true 1, 2, 3, 4, 5, right? And this take us 1, 2, 3, 4, 5. So here, this was the all-time highs. Then flip to the downside and reverse. Continue to the downside pressure. So continue the downside pressure. Try to go below. It couldn't. It reversed and closed at the high. This was the tricky part for me. The third time, so we have one push lower, the second push, the third push was positive intraday. Then we had the fourth push, oh, there's an ugly four, is this one, and now we are having the fifth day. That so far, I would think, let's wait, because we could have a pressure to the downside here and then bounce, or, and we put it in yellow because this is what's is on the table. We trade here, we go here, we take this area, bulls don't show up anymore, and we go here. This area is critical because if they break this, why would they hold here if we stopped being technical, right? So far, we're bouncing in these areas. If we break, I mean, this is not a significant movement. This is why it can be done very quickly. From here to here is just 1.4. Properties show always save as default. Okay. It's 1.4%. So that can be done like in 20 minutes, right? In the NASDAQ. And from there, we can have a different picture. The other equation, let me put it in green. If it's totally wrong, we go here, we press the found consolidation, and this is what happened here. They found consolidation and take it higher. Where? At least to yesterday's close. At least. To yesterday's open, correct? And that's about 1.5 away. Let me double check. So from today to here, that's about 1.8, right? 1.8. That's where we are right now. Let me remove this. Let me remove this. To paint the scenario properly, activate, move it here, activate, move it there, which is very much flat. Let me put it here to yesterday's. First scenario, it's in green. We go here and we trade higher, holding and faking every single one. Second scenario, and I put it in red, we go here and we trade here. right? This is second scenario, and this is the first scenario. Why do I put first up? Because it's not so easy. It is literally not so easy, right? Let me copy this and send it here, bro. Waiting.
Order submitted.
You can see how I got an order submitted to the loan side. This is tricky here, right? We'll see what happened with that trade. This is new highs and new lows. So S&P doing better than NASDAQ. New York Stock Exchange doing better than NASDAQ. This is why I think, hey, it's easier to trade when these are in sync, right? Like, for example, here. It's a bit easier, right? Next window. I guess I could take it here. It's faster. VIX. Volatility is fine. 18, 0.2, 0.72, 0.73. This is not good.
S&P green.
This is not good. Not good. Why? Because it's about to turn negative if there is a spike, right? So, and when these turn negatives, it goes together with the spike. Next, energy doing extremely well. Oops. Extremely well year to date. Gold, consumer staples, materials, crude oil. Very good. I'm going to review crude oil. Russell, better. S&P, 5%. S&P discretionary. And this is where we can now the euro, S&P, discretionary, Russell, so on. And what do we have negative? Healthcare, financials, growth, and infotech. These are starting to get weaker and weaker. Okay. Let me take a picture of this. And this is the year-to-date update, right? Year-to-date update on sectors. Year-to-date equities, okay, and let's go to see what had happened in the last 2 days. Gold down. This is where I want to see it because it's up year-to-date quite a bit, right? But down in the last 2 days. I want to check that. Russell is positive in the last 2 days. Apple, Nikkei, and emerging. Okay, positive. Bitcoin. I want to check how much is Bitcoin right now. And silver. So we have Bitcoin is 15% down in the last 5 days. It's $75. $75,000 Bitcoin. Mm. See how I have here the risk to reward ratio boxes. It didn't work. Bitcoin there. And silver, wow, another 90%, another 9% today. Silver, very good. Gold, 3%. So flashed here and then going higher. Silver, it has more room to go to all-time highs. How much? 33% with a 21%. Gold, we have 12% to 12%. And the other one we wanted to check: silver, gold, Bitcoin, oil. Oil. With this, I'm going to conclude the, the routine, right? We'll go to the news and we conclude. Oil. Oof, tricky chart, yeah. Very tricky. Push higher, 66 and a half. Failed to consolidate their return hard, but then
Russell
it
agreed.
closed high. Push very hard overnight, consolidated, trend line to the downside, above, and trade higher. Mm. They might want oil lower, but it's already 63. It's $10 higher, with that's about $10 higher. That's it. Let me check the news, top news for the day. Market, global markets. So go here. Weird dollar rebound to be cut short by rate cut bets. Go to markets, future markets. With this, we conclude. There is 45 minutes. I have a model to take care of. Nice overview. Hmm. I want to get a grasp of what happened in Europe. So in Europe, the day is positive. That's not translating into NASDAQ nor S&P. You see, NASDAQ is actually negative. S&P is flat. For Vespa is fine, 0.6. It's not fine, it's down. And Asia is flat. . Very tricky, very tricky, like always. So with this, guys, I conclude. I'll see you. I'll go live later on for the system, right? So let me show you where the system is. Remove all of this. The system is here. So it's taking long short trades, right? Right now, when it's zigzagging like this, it's more like a trend momentum. When it's zigzagging like this, it doesn't perform as well. It will give you statistics, historical and real time. So from 150 trades, it has a 58 win-loss ratio. Let me see, what is the date? From the January 30th to today, 150 trades. The average duration, average time in the market is 23 minutes. I need to work on this and see if I can make it better. So when it's chopping, not to enter. But that was all. And thank you so much. If you really like the video, just if you give a thumbs up like this, it will help me. It will help people get more data from this, more views, and people can analyze the markets like we do. Thank you so much, and I'll see you around the open.